Hooty-hoo, all my stock market gamblers. Welcome today. I'm Tall Mike. It's Friday, December 4th. What's going on in the stock markets? We're continuing to melt up. We're melting up higher. Now, what's interesting, though, is we're doing it on very low volume. The volume is going down, but the market's going up. Now, what this tells me is we're getting ready for a pullback soon. I'm not sure. Maybe we just go sideways, but be cautious here. Be cautious here. That's all I'm saying. Today I want to talk about the Great Depression that's coming. Will it be greater than the one in the 1930s? Will it look the same as the one in the 1930s? I talk with a lot of different economists and, well, there's a big debate. You know, is it going to be a deflationary depression or is it going to be an inflationary depression? Now, in the 1930s, we had what was known as a deflationary Great Depression. What happened? What happened? Well, in 1930, you got to understand, things were a little bit different. Things were different because our money was actually backed by gold. We were on the gold standard. We were the reserve currency for the world. Okay, so what happened? Well, prices, they went down. But people, they were afraid of the dollar, so they were pulling their money out of the bank and keeping it under their mattress. Some people were even afraid of money, so they were buying gold with it and using gold to store their wealth. Well, what happened? FDR made it illegal for the U.S. citizens to own gold. He confiscated all gold from U.S. citizens, and he paid them $20 an ounce. $20 an ounce, it's $2,000 now. But what's interesting now, FDR paid everybody $20 for their gold, and less than a year later, he reset the price. He pegged gold to $35 an ounce, meaning that other countries could come in with the dollar as a reserve currency, and for $35, they could actually get an ounce of gold from the exchange window at the Federal Reserve. Very fascinating, right? Well, this price stayed the same. It stayed at $35 an ounce till in 1971. Now, what happened in 1971? This is when Nixon defaulted. France wanted to trade their dollars in for gold at the Federal Reserve window, and they wanted to get paid $35 an ounce. And Nixon said, we're not giving you our gold. He shut the window. He defaulted. He took us off the gold standard. Okay. Now, that's all fine and dandy, but we're still the reserve currency, but we're no longer on the gold standard. All right, so in 1974 is when Gerald Ford came out with legislation. He signed it into law that U.S. citizens can now own gold again. And the price of gold then was about $35 an ounce. You could have bought gold at $35 an ounce back in 1974, and like I say, it's constantly gone up. Now, why has it constantly gone up? Well, because they constantly add more and more money into the system, which basically deflates your dollars, so gold kind of goes up, right? So what do we got today? Are we going to have deflationary prices as we go into this Great Depression? Now, a lot of people say, Mike, we're not going into a Great Depression. We got things like MMT. We can print as much money as we want. We're going to have a good life where everything's going to be great. This debt is not a problem. 28 trillion in debt with another 100 trillion of liabilities is not a problem, Mike. It's going to be fine. Now, a lot of people think that the stock market's going to crash and all prices are going to come down. And it could play out that way. It could, but I just don't think it will. The reason I don't think it will is because they are going to continue to print money. Now, how's the debt going to go away? Well, there may be a debt jubilee. Now, what is a debt jubilee? A debt jubilee is a Christian term where every 7 years it would wipe out all the debts of the people, and it would be a jubilee, and that all debts are forgiving. Like, for example, Biden wants to do away with student loans. That's one of the first things on his agenda. He wants to forgive all student loans. He wants to do a debt jubilee on student loans. Well, you got to understand, when you have a loan, that's a liability to the person that borrowed, right? But it's also an asset to the one that holds the paper on that loan. So how do they get paid back? How do the ones, when there's the debt jubilee, how does it get paid back? It gets paid back by the government's going to print the money, and they're going to pay off all the student loans. Now, the government owns most of the student loans already, so it's going to wipe them out, but your money is going to keep going down. What we have is, in the U.S., in my opinion, we have about 30 million unemployed. Now, if you look at the government's numbers, they'll tell you there's a 6% unemployment rate. They're lying to us. They're lying to us. They want to make this coming depression, they want to make it as invisible as possible. And how they're going to do that is they're going to lie to you about the number of unemployment. They're going to lie to you about how much money they're printing, and they're going to keep the markets up. They're going to keep the markets up. They're going to keep the housing market up by buying all the mortgages so that they can keep the rates down around 1% for home loans. They're at 2% now. They're going to get down to about 1% soon. You mark my words. Now, who's buying these? This is not a free market loan. There is no bank in the world that's going to lend you money for 30 years at 1%. When even the government admits that inflation is already at 2%, and it's going to go much higher. I think we're going to get into what's known as an inflationary depression. Now, will it be invisible? It's going to be painful, I'll tell you that. It's going to be painful. Okay, the market's at 30,000. It can go to 60,000. It can go to 100,000. They can print enough money to make it go up. So it looks like you're in a boom period. Look at Venezuela, their stock market is doing great, but they're in a great depression, okay? You cannot buy any food there. Now, unless the government can figure out a way to actually print food, to print goods and services, then maybe they can get their way out of this, but they cannot. They have one weapon, and that is to print money, to devalue your money. I think we're going to go into hyperinflation eventually, but will be a gradual ascent of inflation coming. It's kind of like when you put the frog in the water, that you're going to turn the water up on him and boil the frog. Frog doesn't jump out because you do it slowly. The people won't notice because this is going to happen slowly. It's not going to happen all at once. It's not going to be that big crash that we had during the Great Depression of the 1930s. No, it's going to be an inflationary where you see everybody's going to feel this euphoria. Like, we're doing great. Look at all the money we're making in the stocks. Look at home values. They're going up. But what they're not going to notice is their money does not buy them anything. The people cannot afford food now. The food banks are actually out of food already, many of them. The lines to the food banks are miles long. Look, it's going to inflate. Right now, the reason we have no inflation with this printing of money is because of the global shutdown. The velocity of money is not changing hands. That's when people are doing business and money's going everywhere, right? It's not happening right now, but it's going to happen eventually. Yeah, but we'll get this vaccine. I believe that. But with this shutdown, they can print all this money and nobody's going to notice the inflation. I'm telling you, it's going to pick up. It's going to ramp up. Now, what's going to inflate? Well, I think the stock market's going to inflate. It's going to inflate. Now, will it ever break? Yeah, it's going to probably break at some point, but it's going to be an inflationary depression that we're coming into. But what can you do? What can you do? I believe in gold and silver. I believe we got to get back to sound money. When they print money, it puts a big smile on my face. I used to get so angry when the Fed would come out with this QE 1, 2, 3, 4, 5, 6, because they were just printing money, and I knew my money was going down. You know, I had money in the bank and just going down. I got to get my money out of the bank. I got to get it into an asset that's going to inflate every time the Federal Reserve prints money. I want something that's going up so I can smile. I can smile through this Great Depression that's coming. It's going to be painful for a lot of people. And be generous. If you have extra money, give it to the food banks. People are starving out there. Everybody's got to eat. Me and you got to eat. Look, there's going to be hard times that the U.S. has never had before. It's going to be incredible, the number of homeless people that are just going to be sleeping on the sidewalk in front of your house. It's scary what's going to be coming. It really is. And, you know, will it crash at some point and get that deflation? Maybe, but I think we're just going to continue in this pattern of printing money, of raising all assets. All assets are going up, but people are not going to be able to afford their utility bills. People are not going to be able to afford their rent. People are not going to be able to afford food. Medicine's going to be out of the question for most people. It is scary times. I know this is probably not what we wanted to talk about today, but I just want you to know you got to protect yourself. Just protect yourself. Maybe I'm wrong and you buy gold and it doesn't do anything. It just stays flat. Maybe you buy a few silver coins. Maybe they do nothing. Maybe it's just flat. But then again, if something does happen where it just takes off and they do have a great reset where gold actually goes from 2,000 to 20,000, you'll be protected. You'll be protected. And if I'm wrong, hey, you still got those shiny metal coins sitting there, and I call it protection. That's all I want to talk about today. Have a great weekend. I'm Tall Mike. I'll be back here on Monday. If you want to come and talk some more, hit that subscribe button. Give me a thumbs up if you like this. We'll talk again next week on Monday. We'll see what the markets are doing. I'm Tall Mike, and we'll talk to you then. Bye-bye now.